Hey, what's up, guys? Hefe, the stock guru here again. I wanted to give you guys another example of the 3 bar play, including the stop loss and the trailing stop loss. Specifically for this one stock, KXIN. For this particular stock, I made a good amount of money on it. So as you can see, I have all my parameters set. I have my 20-day moving average. I have my moving VWAP, and I also have my volume. At the time, this was a big gainer. I woke up that morning. I did my research. I threw my scanner on, and this is one of the big gainers for the day. Again, I like stocks and shares that are under $20. It really gives me the ability to maximize my buck. You know, the cheaper the share is, the more shares, the cheaper the stock is, the more shares I can purchase. The more shares I can purchase on that uptrend, the more money I'm getting for my dollar. All right, so for KXIN, I realized that it was on my top gainer. And like I said, guys, made a really decent trade on this one. So for my 3 bar play, obviously, guys, I'm looking for something that has a lot of consistency. I can see a pattern. I'm not jumping in it because it's moving, but I'm jumping in it because I actually see an upward trend or pattern. So I was a little skeptical about entering on this first one, this second one, third one, etc. I didn't get in until even though it's over my 20-day moving average and my 20-day moving VWAP, and the volume looks good. I was really skeptical just because these candlesticks are really small. So I was waiting for more of a breakout, this gap up. I got in around at, let's say, 455. Like 455. So again, guys, whenever I get into my stock or my share, I am immediately putting my stop loss in. So if I got in at let's say 453, my stop loss was going to be, if I got in at 453, my stop loss is going to be $4.30. So at the end of the day, if I got into this stock and the share price went down, it went down to $4.30, I would automatically sell because my stop loss would be triggered, and that would be the biggest loss I would take for this trade. The best way to continuously make money is to minimize your losses. Again, take it from someone who has had big winning days, but also big losing days, and learning from that. Stop loss is the best way that you can minimize those losses. So I got in at $4.53. I have my stop loss in for $4.30. I can see that it's still on an upward trend. At no point is it touching that $4.30, so I'm pretty safe. And we can even see that even with this uptrend with the 3 bar play right here, we get a downward pullback, but I'm not too concerned because there's only one red candlestick. I see a flat horizontal green candlestick, which is very small. We can see the highs and lows, but we don't really see the opening and close that much, unless I zoom in. Still not worried because I've still over both my VWAP and 20-day moving average, even with my red candlestick right here. And as you can see, boom, it's starting to gap up. So now I'm getting really happy. So I ride this all the way out, guys. I ride this all the way up. I was really excited about this one. And typically I will put my trailing stop in. But for this one, I wanted to stay free. I didn't want to cut myself short by putting that trailing stop loss in, and it get me out faster than which I wanted. But again, guys, here we go. It's coming to this moving VWAP and this 20-day moving average. As soon as it hits this, some people would sell here with this double red candlestick. A lot of times I like to wait for the opposite 3-bar play. I like to wait for 3 candlesticks down. But push come to shove, worst case scenario, if I don't have my trailing stop loss in, I'm going to sell once it hits this moving VWAP or the 20-day average. You can see it hit this moving VWAP right here. So this, you can sell right here, which I did sell. So I got out at 502. So that's a good profit, guys. I think from this trade, I made $1,000. So that's a really good trade, guys. And worst case scenario, if you wanted to wait till you got to the 20-day moving average, you could. You would have got it at 484, so on. I think that was the only trade I did for that day, which is a great trade, which is, great trade. It's a little late in the afternoon. I exercised a lot of patience for my scanners, not jumping into a stock just because I wanted to make a trade. And honestly, I didn't think I would make a trade for this day. But when the opportunity presents himself, you just go ahead and jump right on in. And you can see it has some great upward trend. After that, let me zoom out. You can see after that, for the rest of the day, it started just a downward pour. And it's gradual, so if you don't zoom out or your parameters are really tight, you won't be able to see that. But overall, you can see a downward trend. So I got in at a good price, got out at a decent price, took a profit, went home. So guys, this is the 3-bar play with the stop loss. Typically, I use a trailing stop loss, but for this particular trade, I got out quicker than what I need. Well, I don't want to say than I needed, but I got out on my own versus using my trailing stop loss. So guys, practice with this one. Remember, use your 20-day moving average, 20-day moving VWAP, and I also use my, down here with this red line, my 20-day average for my volume. All right, guys, let me know what you think. Questions, comments, concerns, and down bottom.